Hi, I'm Chuck Gibson. This is Taking Stock with Art Jarvis, a bi-weekly discussion of what is happening in the economy, the world of finance, and personal investment with Art Jarvis. Taking Stock with Art Jarvis is a presentation of Loveland Beacon in partnership with Jarvis Global Investments, LLC. Now here is Taking Stock. Welcome, Art Jarvis. Taking Stock, episode number 45. Thank you for joining us once again. How are you, my friend?
As always, doing fantastic. Thanks for having me.
It's my pleasure.
Yeah.
Thanks for joining us and sharing insight. Jarvis Global Investments, LLC.
Yeah.
That's right. It makes you the expert.
Well, yeah. No, I'm the expert in my own mind. So it's funny. You pull out the global part of that thing there, boy, oh boy. I think we're going to be talking about a few global things today.
Well, we are, you know what, and we're going to get right into it. I mean, sometimes we have some of that side banter about this, that, or the other thing. Today, and you know, people don't know it, but a couple of minutes ago we were sharing, Chuck had some notes and said, here, look at that. And yep. Head shaking, yep, and it's tariffs.
Yeah.
Well, three of the words that were on my notes were tariffs, uncertainty, which is just borrowed from you, because I've learned about that uncertainty because what the market's doing, and uncertainty is causing that volatility. But tariffs bringing uncertainty, which brings the volatility. But the three words were tariffs, uncertainty, and some guy named Zelensky.
Yes.
So where do you want to begin? Which one of those?
So let me start with the 10,000-foot view. And you've heard me say this many times, with volatility comes opportunity. With chaos comes profitability. Okay?
Right.
And I will say, if you keep that in your mind as we have this 1 hour discussion in 30 minutes, it's that's where we are. And right now is the epitome of uncertainty.
Well, I like that you said the 1 hour in 30 minutes, because you and I have been going back and forth, and we got a 2-hour show today. Good. We're only going to try to get an hour of it.
Yeah, we're going to have to focus.
But so anyway, so the focus, as you just said, and it immediately jumps out. So, the volatility is opportunity, and then chaos brings profit.
Yeah. Well,
what we've seen just today, the market. Well, let's say today's again, for the people, this is being recorded on Tuesday, March the 4th, in Studio B. I liked your other comment, too, at the Gibson Communications World Headquarters.
That's right.
Home of Loveland Beacon Talks. But anyway, here we are, taking stock, 45, and yesterday and today, the market has dropped considerably.
We gave up everything we've made this year.
Right.
Yes.
And that and that's the terminology that I've heard. It's like everything that we've made since the Trump inauguration, we gave away in the last 48 hours with tariffs uncertainty.
Yeah.
Yes.
Correct. But I want to stress to you, it doesn't feel good. I get that 100%. People are scared. There's a lot of we always talk about stirring the pot. Well, right now there's about 10 pots being stirred all at the same time, and it's very hard to piece together what all that volatility means and where it's going to go. But the thing I think is important to remember, 6 months ago, we were at 5,500 on the S&P 500. We got up to 6,200 in January.
Right.
Today we're at 5,800. Okay.
So that's still a plus in the last 6 months.
6 months, exactly. Technically we're not in, and I'm using my quote gesture here, but, technically we're not in a market downturn or a bear market until we're down 10%, right? So we still got at least a couple hundred more points to go before we're even considering ourselves, from that top of 6,200, if we take 10% out of there, that's 620 points, right? So we still got a little.
Well,
bit
and that would drop
go.
us, and we would have to get below that 5,500 of 6 months ago.
Right.
Exactly. you got to get essentially you've got to get down to, 53, 54 on the S&P. So just for the listener, we're talking on the S&P 500. So yeah, there's some room. But like you said, it doesn't feel good.
No, not at all.
I don't. You know what? I don't care that we have room before it's bare. I care that we've dropped at all, and so does everybody else like me, and all the clients that you serve. But that's again, I've said many times, I'd be your easy client because I'm like, hey, it's there for the long term. I'm not calling you and saying, oh my God.
Right.
So that's the message ultimately to your clients and to investors who are listening to this. Hey, hang on.
Yeah.
No,
and the crazy thing, don't be happy about all the craziness that's going on in the world right now. But don't forget that if you're in your 20s, 30s, 40s, lower 50s maybe you're still investing, maybe you're still putting money into your 401k, your employer is matching that money that's being put in. Don't forget that when the market drops like it drops, you're actually buying in at a lower price. That's a good thing.
That's the buying in aspect.
Stocks are a little bit on sale. I mean, I'm not going to say it's a great big huge buyout sale, but they're a little bit on sale right now, right? So that is a good thing, right? And I look at it as that too. I have not seen anything that says, we're about to go into a deep recession or anything like that. No, this is an opportunity, especially if some new money's come in, maybe take some of that new money and start to put it to work, right? So, again, you can look at it from a negative standpoint and be, again, we talk about fear and greed. We're in fear mode right now because people are having trouble figuring out where we're heading. But within that, if you have enough gumption, let's use an old-fashioned word there, you got enough gumption.
I love it. Gumption.
You like gumption?
Gumption is great.
To actually get into the market at a time when it doesn't feel great, you usually end up pretty well off.
Well, if our listeners, your listeners on Taking Stock, because any real smart what you should be doing is coming from Art because he knows. And again, we've got the caveat of he's not saying, this is not advice. I'm not telling you should do this. You should talk to your trusted advisor or contact Jarvis Global and become one of their clients, and then that's your trusted advisor. But that aside, if they've been listening, they're continuing to go in because you're contributing some new money, whether it's weekly or monthly or whatever. That's what we've told, especially young investors. Put something in every day. So I was kind of, I'm not laughing because I'm almost sad. So, I've got a date every month that I add new money in for my account.
Sure.
And it was like, last week. and then I needed to be buying in today, not last week. That's why I said I'm a little bit sad. Right. But the point is, again, for listeners, trying to gain insights into the market, trying to gain insights into investing, stay the course. Yeah. We always say that. You always say that. We reaffirm that notion. But the other thing is, if you're especially a young investor and you're building, you should be buying in.
Yeah. Yeah, and don't get me wrong. As long as if we continue this, our podcast here for an extended period of time, there will be a time where we walk in, sit down, and I go, okay, it's time to go into a little bit of protection mode, right?
Sure.
Some market forces or economics or something bad happens in the world or something like that, where we do have a conversation about, okay, we're probably going to get into something that's negative that for a little more extended period of time. So let's make some adjustments, okay? We're still not running away from the plan, but that doesn't mean we can't also protect ourselves a little bit. Sitting here today, we have all this uncertainty, we have all these things going on, but I'm not sitting here telling you it's time to head for the hills.
Right.
Right. So,
well, the question that comes to mind, and you touched on it a couple minutes ago, and I've been heading there ever since, which is, so the chaos is profit. Mm-hmm. Been a little bit of chaos the last 2 days.
Yeah.
So, is that what's going on? It's like, maybe these wise investors like now's the time to sell off. Mm-hmm. So there was sell-off in the last couple of days, and while the market drops because of that. So are people taking profits the last couple of days or what?
That might be a small part of it, but honestly, I think it's more people panicking. Yeah, I think.
But just the uncertainty and the
I
panic.
think the fear is
the
kicking
volatility
in.
aspect, not the chaos.
And I'm hearing that in conversations I'm having. Should we do something different, or those kinds of conversations. What do you think? Give me some encouraging words, right? Well, here's my encouraging words right here. We're not. You look at again. We talk about, let's say, gross domestic product. Okay, 70% of gross domestic product is the consumer. Okay. 17 or 18% is the government, 18% of it is business, and then the other plus or minus 3 or 4% is imports, exports, right? Okay, so got to keep an eye on the consumer, no doubt. The government is most certainly being messed with right now, so what do those numbers look like, and what are those things going to look like? But then, now we talk tariffs, right? So there's the other part. Then you were talking about slapping, we're going to slap 25 or are slapping 25% tariffs on China, Canada, and Mexico. Well, guess what? They're going to retaliate, and they're going to slap us with 25. But of our gross domestic product, that's 3 or 4% of the equation. Okay, so I'm more worried about the consumer. So if I have to pick something that I don't like about this whole process, is I don't like the fact that the consumer is scared. Okay, they're uncertain. They don't know what's coming down the pike and what that looks like. Are my grocery prices going to go up because of what's going on? All those kinds of things. They've already went through back in 2022 where they got hit, and they're still paying the price for that.
Right.
Don't bring me another round of that. Right. So I get it 100%. I believe, and again, as you're well aware, no one from Washington or the Federal Bureau of Economics is calling me and asking me my opinion. But, I truly believe, and we're already hearing it today. Like this morning, we were down 2%.
Right.
In the S&P 500. We're currently down 1%. Okay. Canada slaps us with a 25% tariff, but it's at the same time said, we are looking to get to the table quickly and get this resolved. That's a positive. And you know what? Well, that's all we need to happen.
That's So that's the question. Like you said, I saw the early returns. When the market opened at 9, boom, it was fast, dropping, and so we dropped 2%. And now here we are. We're at early afternoon, a little late start for taking stock in Studio B today. There was other business to tend to, which was very good, positive, helping in the community of Loveland. We could talk about a nice donation made to the Life Food Pantry today. So a little delay in getting us into the studio to record this episode, but it gave time for the market to do something, and so it went from 2% to 1%, as you just said. Is that a reaction? It's a positive reaction for sure, but is that a reaction to hearing things like, okay, we're going to you slapped 25% on us, we're slapping 20 or 25% back on you, but we want to come to the table. Then I said those 3 words were tariff, uncertainty, and Zelensky. And apparently, whatever you heard even the last couple of days after that Friday debacle in the Oval Office with Zelensky walking out and the exchange between he and Trump and J.D. Vance, which we've heard until we don't want to hear another word about that exchange. But, I know today I heard very solid reports that Zelensky is like, I'm ready to come to the table, and somewhat apologetic, that shouldn't have happened. Without flat out saying it was on me. It's not like Zelensky said, that's on me, I misbehaved, but a hint of, it was wrong.
It's a Captain Obvious moment.
Right, right.
That shouldn't have happened. I agree with you. I'm not saying it's your fault, or I'm not saying it shouldn't have happened. But, so look, and I don't, let me throw a couple more words on this for you. I have a theory, I have a belief that there are things that happen that you see out front and center, and you don't like what you're seeing, but I also have a feeling that there are also things going on in the background that we may never see that ends up serving a purpose and actually brings out a positive resolve to what's going on.
Well, that's what we're counting on. I mean, it's, specifically, like I said, if the third word was a name, Zelensky, and what happened from that. But my point is this: very positive strong reporting that Zelensky's like, let's get to the table.
Yeah, 100%.
And so it went from 2% to 1%. You know, is that a consumer reaction? Is that a market reaction to, hey, wait a minute, you know, a little bit of that uncertainty, a little of that headed toward chaos, volatility is calming even as the day goes on, which, you know, I don't. How many of the most recent episodes of Taking Stock have we? You know, the market is up and down, not in a quarter, not in a month, not in a week, but daily.
Sure. Yeah.
Right?
Yeah, we had one day we were down 2.5%. I think we finished flat.
Yeah.
Another
That's
day
a nice
we were
close,
down.
right?
Yeah, well, yeah. I mean, I'm happy to see it. All of a sudden, you're like, well, I'm happy that we didn't do anything today, right? Because we were down 2.5%. So, but I think people are literally glued to the ticker tape, looking for a positive announcement. And I think in the last, I think it's a good thing we actually are having this recording session a couple hours later, because that has actually allowed the market just today to digest a few things and also get a little bit new information that actually, makes things not look so bleak, in my opinion. So,
well, is the immediacy, money's your gig. The markets, the finances, the investment, the world economy, that's Jarvis Global, investments. I mean, that's your gig, that's your field expertise. I'm into my 41st year as a journalist.
Right.
The media, the news, that's, supposed to be my bailiwick. Do you think that the immediacy that we have now, I mean, everything is instant.
Yeah.
And is available to you in an instant as it happens right now live. There's a reporter somewhere with his smartphone, ready to report in an instant whatever it is. Mm-hmm. And so when I say, it seems like, and correct me if I'm wrong, over the years that this isn't what we saw. We didn't see the market up and down every day. No. There was a trend over the course of a week or over the course of a month or certainly over the course of quarters for sure. But it's every day now. Is that going to stay that way because of the immediacy of news?
100%. And you nailed it. I was doing a presentation in front of one of the high school classes, and some young person asked what I thought was a very astute question: was what has changed the most in the 30-something years that you've been doing this? And it is by far easily communication. The amount of data that we receive on a daily basis is ridiculous. And the crazy thing is some of it's actually correct. So and that's the problem. Like, I'll tell people all the time, I'll turn the TV on, I'll turn on CNBC with all the stock market information. I turn the sound down. I don't want to hear it. I mean, because I can sit there and listen to it.
Well, you don't need to hear.
Well, I don't want to.
Well, I'm just saying you don't need to hear the analysts.
Right.
And well, on the other side of that, that's a double-edged sword with the word need. I don't need to hear it either. For a different reason. The same reason when you say I don't want to, I don't need to hear it.
Because this guy's going to say one thing, and then an hour, 2 hours later, they're going to bring on another person who's going to say the exact opposite.
We'll change the channel too,
which
because
is
there's
what
a
makes
tilt.
Yeah, well, which what makes the market, right? This is what makes the market, right? But I want to analyze what I have come to believe over the last 3 decades, 4 decades, whatever that is. I really don't want to be messed with, right? I want to kind of operate somewhat in I'm going to use the word vacuum. I'm not sure that's a good word, but it's we do 100% of our research internally.
Right.
Okay. So this is what we believe. Now, am I right 100% of the time? Most certainly not. But over a 38-year period, have I been? I'm going to use the word correct. That's not a great word either. But have I been at least in the ballpark or done better than the markets in 34 or 35 of those years? Yeah. And there's
have you been in over the 38 years? Have you been, and your clients answer this question, not you. You can go ahead and answer it right now. But have you been a trusted advisor, a trusted investment advisor? Yeah. Have you produced positive results for your clients?
Yeah.
And and again, as you said, that doesn't mean I was right on all of my forecasts and where you should be 100% of the time. Sometimes there was losses.
Oh,
but
yeah. Or we underperformed.
But over 30, I mean, if you had maybe you have a client still, or more than one, that you've had that entire 38 years, and he hasn't, pulled out his total retirement thing and said, we're done now. We're just going to go get on our yacht and, ride around or whatever. So I'm sure you've got clients that have been there. They can say, hey, our investments grew, and we're better off these 38 years later, or these 28 years or 20 years or 50, however many years somebody's been with you, they're better off. Yeah. And, and of course, to be fair to others, Jarvis Global Investments isn't the only one out there that's, having that success too. So, the other piece of advice that we do not mind sharing here on Taking Stock, or that Art doesn't mind sharing, or I wouldn't mind sharing myself, is, find a trusted advisor to help you with yours, and take information from us, and maybe that helps you ask questions of whoever your trusted advisor is. Like, hey, wait, I heard this. What does that mean, or whatever?
Yeah, and I've had this conversation a couple times here in the last couple months. It's we're here to help people make money and to reach their goals. Okay, right. So they want to get retired. They want to put their kids through college. They want a house. Whatever those goals are, But like you said,
travel.
Yeah, I mean, whatever retirement. But we have been there for some clients who we've had for 30 years. We've been there where their kids are 12 years old. We've been there when their kids graduate from high school. We've been there when their kids graduate from college. They get their first big boy, big girl job. We've been there when they start having kids. We've been there through all this stuff. We've been there when they retire and actually start realizing their goals and stuff like that. Some of these clients are they're darn near family. I mean, they are family. I mean, some of them they're family members. Okay, so yes, we're there, and it's important to do a good job from a monetary standpoint for them, but it's also exceptionally important for us to be there for all kinds of different life events and goals and things like that. So anyway, I off on a little bit of a tangent there, but I thought, again, I over my career, I've come to realize that we're doing way more than just making people money, so.
That's an important piece of it.
Yeah.
And so, for people who haven't chosen somebody yet, Jarvis Global Investments, you can contact them and maybe talk about how they can help you in your future financial needs. So that's our brought to you by Jarvis Global Investments commercial break. But again, it stems from the discussion of that first, that question from the journalist aspect is because of the communications, because of the immediacy of the information, and as you mentioned, the amount of the information in response to a high school kid's question. It's mountainous, it is impacting the market daily, and so we can't really put it this way. I'll do it in a we can expect the market to not necessarily be volatile, but ride up and down in the course of a 24-hour, whatever the 9 a.m. the bell rings and 4 p.m. the buzzer sounds, or whatever it is for the market officially open and close date.
Ding ding.
Right, but the 9 a.m. bell and the 4 p.m. closing bell. Yeah. So whatever that is, eight hours.
The problem with the news is it's skewed in many cases. Okay?
Well, that's what we kind of slipped around that for a second. But go ahead and make that point.
Well, so what's very interesting to me, and I'll just give you one example. Like we're seeing news stories talking about the billions of dollars that the tariffs are going to have a negative impact on certain things, but many of these numbers are being extrapolated out into an annualized number. Okay, they're giving you numbers based on the assumption that this tariff thing is going to drag on for 10 or 11, 12 months, right? So, so what they're saying too technically is not incorrect, but they're giving you a 1 year view, as opposed to maybe the whole tariff thing ends up being a much shorter period.
Well, I'm going to use a sports analogy to bring that home.
Right.
So they're giving you the score before the game is played.
There you go.
And until the game is played, we don't really know the score.
Correct.
So they're forecasting an outcome based on the information that they have today. That this guy's the starting pitcher and this hitter's out of the lineup hurt or whatever. If we're going to do, since it's almost opening day baseball season, I'm sticking with the baseball analogy. But you got to play the 9 innings. Yeah. You got to play the 9 innings. And so for investors, you got to play the 9 innings. And these tariffs, if the starting pitcher is a 25% tariff against Canada, Mexico, and China, he's not going to last 9 innings.
Yeah, I mean, who's to say that in the next month, maybe the tariff comes off the table while they're talking. If they're negotiating in good faith, and maybe okay, we're going to take the tariffs off right now because we're trying to move forward. We're having good discussions, or we're not having so much luck. Things aren't going that great. I'm going to slap another 10% on you. I mean, there's a lot of things that can happen in the coming months, right?
Well, that's called leaving the starting pitcher in too long.
Well, I mean, there's going to be. I like the sports analogy. Yeah. But it's and the one thing I'll say, and I'm not sure how far along we are here, but the one thing our country is not in a good financial spot. Okay. It's become funny money. We have $36 trillion worth of debt. Okay, and our cost of servicing that debt has gone up substantially in the last 2 or 3 years. Okay, we have to do something, and I can't tell you whether it's going to become a bad thing next year or 100 years from now. Okay, when does it pop? Right? When do the bad things start happening? If we need to take care of things sooner than later, and experience a little pain sooner instead of a whole lot more pain later. Okay, so and you look at like Greece, let's say, and I think it was 8, 9, maybe 10 years ago, who knows? But they went through their austerity programs and things like that, and they were going through a reset, and their citizens are in the streets rioting and protesting, but they were to a point where if we don't do something, it's going to be way, way worse.
We will crumble.
Well, yeah. So again, I'm like everybody else. I don't like pain. Okay, and I'll shy away from pain, but I'd rather if it becomes ripping off, putting a Band-Aid on it today, or having major surgery down the road, I'll take the Band-Aid.
Let's heal the wound.
Yeah,
before
exactly. So again, there's a whole lot. There's a whole lot of ways to look at what's going on right now, but the net for me is we have to do something. Yeah.
Well, if we stick with the baseball analogy, so throw the tariffs out there. He's throwing some mean stuff. He's the starting pitcher, and he's going to kill you. Mm-hmm. But let's get the relief pitcher in there, and they always call him the fireman. Well, let's put the fire out.
Yeah, there you go.
If that's what's going to happen.
Yeah, perfect.
We're in a closing minute here.
Okay.
Covered a lot on the tariffs.
We covered a lot and not a whole lot.
Right. No, I know there's so much more we could talk about, and you started touching, because I do think that we need to spend some time. Especially given what's going on with the current administration. Mm-hmm. The Doge is a big part of things, and so what I'm leading to is, I think in taking stock 46 coming up in 2 weeks, we're going to have to spend a little time on what that means for the deficit and how how much success, because again in 2 more weeks we're going to see a lot more, and the impact. We didn't talk anything about. Today is this Tuesday, March the 4th, and this evening, Donald Trump is going to address Congress, or at least whatever members of Congress decide they're going to show up, and not boycott the president's address to Congress, because that's a whole different issue. And we can talk about that in 2 weeks as well and see. But we'll have some more clarity to the picture by then.
Oh, is that a promise? Again,
I said it, not Art.
In 2 weeks, we may have whole another platter of stuff that we got to deal with. But but and I will say the one thing you brought up is okay, you know, with the Doge and things like that. You know, so let's say we dig up extra money or things like that. What and the big question for me personally is, okay, what do we do with that? Okay, is that something we use to pay down the debt, which probably wouldn't be a bad idea, or does that money, some of that money, go back into the public and there's a multiplying effect to it and things like that? I mean, that's what I would love to see. What is going to happen? What's the next step?
Well, have we the people? I'm very famous for using that. You know, people that see my social media, nothing to do with Loveland Beacon, but on Chuck's personal social media, I frequently use that term, "we the people." Well, we the people have to tell those who govern, President Trump and his administration and all those, whoever they are, what we want done. If they're finding the billions of dollars that we've been hearing in the last couple of weeks, if they're actually finding that and starting to, that's saving us, saving taxpayer dollars, well then, just save it. We don't, cut the taxes or whatever. Or do we want to press the thumb down on them and say, hey, use that to, bring back the deficit a little bit. Stop. Let's slow down that deficit clock because it's roaring like a jet across the ocean.
And honestly, I don't know the answer, but I think it's a combination of the two. I mean, we have to do something about our national debt. That's all there is to it. Our households, our cities, our states all have to work underneath the balanced budget. So does our federal government. But at the same time, as we learned today with the Loveland Food Pantry, there's people are out there struggling right now. They're having way more trouble here in the last year or two making ends meet than what back in before 2022, right? So it's probably a combination of the two, but once again, as I always like to say, no one called me and asked me my opinion, so we'll see what happens.
Well, we appreciate your opinion here on Taking Stock as we come to a close for episode number 45. I thank you again for joining us and sharing the insights. And we'll remind the listeners that in 2 weeks we'll be back. We're going to dive deeper into the deficit and what's happening with whatever taxpayer dollars are being dug up and found and saved and how those will be directed to help.
All right.
Thanks.
Well, hey, I appreciate you. Thank you.
You bet. Until next time. Thanks for joining us for this edition of Taking Stock with Art Jarvis. Join us again in 2 weeks for our next edition. Taking Stock with Art Jarvis is a presentation of Loveland Beacon in partnership with Jarvis Global Investments, LLC. Jarvis Global Investments, LLC is a registered investment advisory firm. The advisor is not attempting to furnish personalized investment advice or services during this production. Individuals should fully investigate the appropriateness of any investment before investing. Past performance is no guarantee of future results. Investments may lose value.